Hey, it's Clay Trader, and this will be a robotic trading quick lesson entitled Are Stop Losses Worth It? And I have the question down here: can you be profitable with a 20% win rate? Meaning, if there's five stocks and you play all five of them and you only get one being a winner, can you still be profitable? And we'll get to the answer to that question as we proceed through the video. But this is just going to go over stop losses. If you're sitting there asking yourself, what's a stop loss? And please watch this video because if you have any interest in being successful in the long term, stop losses are something that you'll definitely need to learn how to identify and apply, or else you're not going to last too long. All traders can get by on luck for a little while, but like I said, in the long run, things will catch up with you if you're not being disciplined and aren't educated in terms of the stop losses and how to put them into play. So let's get started here. So today is November 19th, 2011, and the reason I'm telling you this is there's nothing better than real-time examples. Textbooks are great, don't get me wrong, but textbook is going to go and pull examples. They're going to surf through all sorts of days and months and find ones that fit their exact criteria. And that's good because it's education, but in my opinion at least, there's nothing better than something that's actually happening real time or that has just happened and played out, not from a textbook, not specifically picked out of thousands of charts over a long time frame. And just real quick, so you know that I'm not just pulling these charts out anywhere. Here's MarketWatch's homepage here. Let me refresh it real quick. So refresh, and there you can see today truly is November 19th. So no shenanigans there. It is this date. And where did these charts come from? They came from my newsletter, BullWarriorStocks.com. And I'll just pull that up real quick so you can see what I'm talking about. But essentially, every Saturday we do what are called warrior charts, and that's simply we find five chart setups in different categories. Here are the categories, and you can see that the two we're going to be looking at is MTOR and GCA. MTOR was our bounce play, so this is what the chart looked like on Friday. And then, like I said, we put this out on Saturday, and then the other chart we're going to look at right here is GCA. This was our trend trading play, just simply one that was in an uptrend, and the trend is your friend. So here's a newsletter. Like I said, this was for the week of November 14th. Now it's November 19th, so we've just finished up this week. So let's see how these two charts played out and why it would probably have been a good idea to use stop losses. So the first chart, actually we'll go and look at the chart first, was MTOR. This was how the chart looked, if you remember, and stop loss should have been placed if you knew you were going to get in Monday morning right down around this area. I'm not going to go into the rationale on why it should be placed down there. That's a whole other video and whole other subject, but stop loss would have been placed down there, and any chartist or anybody that understands charts would understand why that would be the case. But you can see that the next day, Monday morning, opened here and then went down there, violated that, so you're out. And let's go back and kind of just see how this played out. So like I said, it was a bounce play. Monday morning opened at 8:33. Friday's low, the candle before, was 8:03. So for a conservative stop loss, 7.95. If you don't quite understand where all these stop loss numbers are coming from, that's not the point of this video. Because like I said, that's a whole other educational topic. But the point is just why would you ever care about a stop loss to begin with? So as it played out, Monday hit a low of 790. Therefore, that would have stop loss. That would have triggered our stop loss and then given us a loss of 4.56%. Which, yeah, that is a bummer. Don't get me wrong. Nobody likes to take a loss, especially on a Monday morning. So taking a loss. And then let's just see what happens the rest of this week. So I'm sure you'd be kind of bummed out. Nobody likes to see red Monday morning. But now that decision's looking a little bit better, considering Tuesday this huge drop happened. And then after Wednesday, this decision would be looking even better. And then you can see Thursday and Friday, this little 4.5% loss is looking extremely smart, and you're probably the best, thinking that's the best loss I've ever taken. Had you been uneducated or just undisciplined and started averaging down, or who knows what to get yourself into trouble, you would have just created a disaster for yourself as this chart just really fell apart. But that's what's great about stop losses: protect your risk on the downside. So you would have left this play with a 4.5% loss. Now the next play that I had pointed out, like I said, it was GCA, and this is what it looked like going on Friday. So Monday, here we are. It's a trend trading play, so you just want to get in because the trend is your friend. It's pulled back some. So Monday it opened at 311. You hop in and you would set your stop loss right down in this area. Again, not going to go over why that's the case. If you understand charts, you know why. But the point being, you put in a stop loss down there. And then after this day's action, that's great. So you move your stop loss over. Now after this day, okay, you can move your stop loss up some more. So, now it's up around that area. Next day, even greater. So now we're moving our stop loss up to here. Because we don't want to sell too soon. You don't want to leave profits on the table. The next day, even bigger day. So now we have our stop loss moved up here. Once again, you want to leave your stop loss below because let's say you would have sold right here. Well, now you just left all these profits on the table, so our stop loss is right there. And then on Friday went even higher, and we're just gonna, for the scenario, say you sold right at the close at $4 there. So let's see how this played out now with the numbers. So again, this was our trend play. The trend is your friend. You just want to get in. Monday morning opened at $3.11. Friday's low, the candle before that was 309, so your stop loss at 304. The way it played out, the lows of the previous days, as I just showed, were never violated. Therefore, the stop loss was never triggered. And for just the video's sake and wanting to get a percentage, we'll just say that you're the trader who doesn't like to hold over the weekend, so you just sold at Friday's close just so you'd have no positions in your portfolio over the weekend. So you sold at $4, and that gives you a gain of 28.6%. Not too bad. So the math. So for MTOR, for the disciplined chartist and somebody that understands charts, 4.5% loss. MTOR for the non-disciplined or non-educated, meaning you don't know what a chart is or you don't use them and you just kind of guess. Potential disaster and just a really potential mess because who knows if that one's done going down, but just not a good situation. Now, on the other hand, GCA for the disciplined chartist, 28.6% gain or more. Like I said, you should technically still be holding that one, but we'll just call it 28.6%. And GCA for a non-disciplined or somebody that doesn't follow charting, potential shortfall. You might have left quite a few profits on the table. And that's never a good thing. You want to get your money working for you, and when you get charts like that, just kind of sit back. So the end of week profit was 24.04%, just because you knew where to put the stop loss and you were disciplined to honor it. This is a big percent, but had you not taken this loss and been disciplined, this loss could have been, as you saw, much more massive, which would have completely wiped out. Even if you had played this chart absolutely perfectly, but if you would have been undisciplined up here, that would have wiped out this whole thing. Which brings us back to the question, what if out of the 5 stocks you only got one winner, which is a 20% win rate? Well, if you got that 28.6% winner and then lost essentially 5% on your 4 other plays, right there you would have still come out at 5.8% for the week. And that's only 1 out of 5 you'd get a winner on. Hopefully you'd be able to get at least another one, but 1 out of 5, 20% win rate, you're looking at still almost a 6% gain, and there's nowhere else in the world that I know of that you can get a 5.8% return on your money in 1 week. So moral of the story, learn how to use stop losses and apply them. So on that note, learn how to leverage charts. If you're interested in that, I'd encourage you to either click on the link if you're watching this from iHub in the post, or if you're watching this on YouTube, just go down near the comment section area. There's a link, and if not, you can go to tinyurl.com, robotic trading. I just wanted to shrink up the URL because the main one's pretty long for that. So just head here, and you can learn more about the product And what that is, it's over eight hours of education that'll help you know where to put stop losses in, help you just show you charts and everything like that. It's gotten really good reviews and testimonials, so I'd highly recommend it. If you thought this whole video was pretty helpful, then you're gonna like the whole video series because it's done in the same format. Really break things down and go over piece by piece. So I'd encourage you to go to the website and check out more about what it entails. And then this is all free down here. Like I said, my new newsletter, bullwarriorstocks.com. Every Saturday we put out the warrior charts, what are the 5 different chart setups. But that's only limited. I mean, if you don't understand charts, then you're not going to really have any idea what to do with them. But at the same time, if you do know charts, I do my scans and put them out, and you can do with them as you please. But it's a nice little service. So I'd encourage you to check out both of them and let me know if you have any questions. So with that, I hope this helped you out. I hope you got the point that if you don't know what a stop loss is, you need to learn and start applying them because they really can make your life much easier. But more importantly, if you're concerned with your overall health as a trader in terms of making it in the long run, definitely learn how to use those stop losses. Thanks for listening.